Let's move on to talking about Signature Global. Well, this one came out with its third quarter numbers post-market yesterday. In terms of key highlights, it achieved 84% pre-sales guidance, and it also expects to achieve around 47% of collections in the fourth quarter. Realizations also continue on an upward trajectory at about 12,565 per square feet. But looking at the counter, this one is down about 3.5% in trade. But to talk to us more about this one, we are being joined by the CEO, Mr. Rajat Kathuria, from Signature Global. Well, thank you so much for joining us and welcome on the show, sir. My first question to you will be about the growth and the guidance. What would be the key levers going ahead, especially in FY26, which will aid achieving this kind of guidance?
So, thanks a lot for inviting us to your show. So, see, during this year, our strategy was, similar to the past, but very simple that if we are creating supply around mid-income housing products, it is kind of taking a good, it's seeing a good offtake. So during this 9-month period, we launched multiple projects in our micro markets in and around Gurgaon, whether it be on the Southern Peripheral Road or on the Sona Corridor or on the Manesar side. We've launched few projects, and all of them have seen, good uptake in the market. That's what's led to, us achieving almost close to 9,000 crores in terms of pre-sales during this 9-month period. It was 8,700 crores to be precise. And if you look at the entire calendar year 2024, the pre-sales numbers crossed 12,000. Rather, they were close to 12,800 odd crores. So our strategy is simple to kind of, focus on mid-income housing, keep coming up with new supply, and at the rightful price points to achieve growth.
Hi, Mr. Kathuria. This is Anushi joining in the conversation. Firstly, I want to ask about the pre-sales number. It's been on a strong trajectory for FY25. 87% is what we've achieved. Is there an upward revision that we are looking in terms of where the pre-sales is concerned? And also, if you're talking about the collections, now we need to achieve the 6,000 mark. Currently, we need to achieve about 47% of guidance in the fourth quarter as well. So would there be some acceleration? What is the picture building up for collections as is pre-sales?
See, there is definite acceleration on the collection side. So we do expect to, do much better collections than what we've done in the previous quarters. We've kept the guidance constant as of today because, there's still room for this quarter, collections to happen and to improve. At the same time, pre-sales, we are confident that, we will cross the 10,000 mark, but, we've also kept the guidance constant as of now on that front as well.
So constant guidance is what we are looking for. Now, in terms of where the revenue recognition is concerned, we've achieved 2/3 of revenue guidance for FY25 in the 9-month period as what we are seeing. Now, for FY26, there is an expectation of acceleration in terms of where the revenue recognition is also concerned. So I want to understand that since you follow a project completion method as per our previous conversation also that we've had, what is the margin picture also going to be like along with the revenue growth that can be expected in the coming 1 to 2 years? Is there going to be an improvement in terms of margins as well? Because there is also focus on mid-income. As you said, that's the core strategy, but some premium projects also adding to the mix.
Right, Anushi. So see, if you look at our current sales picture and the profitability around it, so effectively, we are targeting to cross 10,000 crores in terms of pre-sales this year. And the implied EBITDA margin on this entire business is close to 35 odd %. We are confident about that profitability number because, the land is kind of locked in. It's mostly owned by us. And hence, we are aware of the price points at which it's selling. So, costs could vary, but, by and large, we'll be able to achieve the EBITDA margin on this, sales, which is currently happening at this point in time. What we are seeing in terms of revenue recognition, you're right that we have to follow, completed contract method of accounting, which effectively means that if construction has a cycle of, let's say, 3 to 4 years in terms of project completion, what you're seeing in the profit and loss account today is the size and scale of the company which existed about 3 to 4 years ago. For a company which has seen massive growth over this, period, post-COVID sort of period, there's a huge difference in terms of, what is currently being achieved and what is kind of getting reflected in the P&L account as of today. But over the years to come, there'll be convergence on both the points. The current profitability is close to 35%. The earlier margins are, at a gross margin, we've achieved around 27-28% during these 9 months period, but our entire SG&A, which is kind of going into the profit and loss account, is for the current scale of operations. And that's kind of, taking our EBITDA down to around 11 to 12%. But you'll see like a sustained growth, in the margin picture in the coming quarters and years.
Okay, so a sustained growth is what we are looking for, margins coming forward for the quarters. But also let's talk about some of the key launches. Want to get your clarity on Q4. What are some of the key launches that could be expected? And even going forward in say 26, 27, now you have inventory worth of about 50,000 crore with a GDP potential of around 50,000 crore. When can we see some of these launches taking place? If you can give us an idea on these ongoing and forthcoming launches that you have planned for the next 2 fiscals.
So, Anushri, we've identified 3 key spots in the Gurgaon market which we feel are very well accepted by the market for mid-income stroke premium housing products, which is, let's say, on the southern peripheral road, which is like an extension to the Golf Course Extension Road, or on the Dwarka Expressway, which kind of got completed last year and has seen some tremendous infrastructure developments happening in that area, or the Sona Elevated Corridor, which is the starting point for the Delhi-Mumbai Industrial, corridor or highway as well. So in all these 3 markets, we've done launches in this calendar year, which has gone by. And even in the coming year, we are coming up with more launches because, we have a fairly good land resource and we can, come up with launches on a continuous basis. So for instance, in Sector 71, we are going to do a phase 2 of a project which we launched in June 2024 by the name of Titanium. And even in Sector 37D of Gurgaon, we usually brand it around the word DXP. So, we are coming up with 2 new projects in that market as well. So our tried and tested market, you will see more product launches.
And are there any concerns about delays in some of the launches? Now, if you just take a look across some of the real estate players, now they've cited some approval related challenges which have led to a delay in the launches that have been there. Could there be a possibility this happening in the sector in which you operate as well, which is mainly in the Gurugram side of the region? Want to get a perspective on that as well as the realizations from your own. You're already touching realizations at the mark of 12,500 or so. So do you expect a further upside from these levels, or are they expected to stabilize with the current levels which are there?
So we are not seeing any approval-related snags. So we are not seeing that as a risk at this point in time. The project pipeline, which we are targeting to launch over this calendar year, now, we are quite advanced in terms of those approvals. So we don't see that as a, something which is very concerning to us at this stage. As far as the price points are concerned, on a portfolio level, we've seen about an 8% plus rise during these 9 months. In comparison to the 12 months, which is gone by, which is fiscal year 24. Going forward, we do foresee like a single-digit rise in terms of price points because demand is still kind of, outpacing supply, and we expect the prices to go up in a more moderate manner going forward.
Okay, fair point, Mr. Kathuria. My final question to you is about the rate cut which took place in just a few days ago. That was the 25 basis points. Want to understand, considering that you have the mid-income and the affordable side, what is this quantum of benefit that is in it for you, and are there expectations of further such cuts also aiding your business going forward?
So, see, both the, couple of macro factors were very positive for us, whether it was the reduction in income tax, during the budget 2025, or it was the, rate cut by the central bank. So both of these factors are beneficial for the urban consumer who are, our customers as well. So both of these factors will have like a, positive impact on the business.
Okay, well, thank you so much for that, Mr. Kathuria. That's the time that we have for the conversation. Thank you, Anushi, for joining us as well. It's always a pleasure to speak with you, Rajat. Thank you so much for joining.